Good afternoon. I'm Jonathan Adishek, Chief Communications Officer for Nissan Motor Corporation. Thank you for joining us for this press conference to present the financial results for the fiscal year of 2016. Today, the details of the financial results will be presented by our CEO, Saikawa-san, followed by a Q&A session. Please note that all aspects of this press conference, including the Q&A, are being broadcast live on the internet. I'll now turn the floor over to Saikawa-san.
はい、それでは
Thank you very much. Good afternoon, ladies and gentlemen. Thank you very much for joining us for the presentation of the fiscal year 16 full year financial results announcement. I would like to give you the results of the fiscal year 2016. And next page, please. And make business updates as well as the outlook of the fiscal year 2017. I will go by this order. Starting with the results of the fiscal year 2016. In fiscal year 2016, as you may know, compared to last year, foreign exchange conditions deteriorated. However, we delivered solid financial results. You see the financial highlights over here. We generated consolidated net revenues of 11.72 trillion yen. These figures are based on the figures submitted to Tokyo Stock Exchange. So joint venture in China are based on the equity basis, so it's under the net income. So based on this basis, we hit the net revenues of 11.72 trillion yen and operating profit of 742.2 billion yen and operating margin of 6.3%. Net income came to 663.5 billion yen. This includes the proceeds of the divestiture of Calsonic Kansei shares. We generate automotive free cash flow of 677.1 billion yen. Before accounting for our investment in Mitsubishi Motors and the proceeds from the divestiture in Calsonic Kansei, free cash flow reached 817.1 billion yen. Nissan ended the period with the net cash position of 1.64 trillion yen from its automotive operations. To measure the company's growth and improvements, these numbers are based on the constant currency basis. On this basis, net revenue rose to 12.98 trillion yen from 12.19 trillion yen in fiscal year 2015, and operating profit increased to 1.02 trillion yen. This is equivalent to an operating margin of 7.9%. Let me show you the walk chart. As I said, these are the numbers that we generated from the left. These are the positive contributors due to sales, selling expenses, and the cost items. On the bit right-hand side, in terms of performance overall, you discover that we generated 230.8 billion yen of improvements. As a result, we should have increased operating profit as such, but there was a deterioration coming from the forex impact, which was 281.9 billion yen. So all in all, the operating profit stood at 742.2 billion yen. Next, let me talk about the financial indicators which are submitted to the Tokyo Stock Exchange. I will not repeat the numbers, but the net revenues came down by 3.9%. Operating profit came down by 6.4%, while ordinary profit increased by 0.3%, while net income, which is at the bottom, increased by 26.7%. Let me move on to the pro forma basis. So far, I was talking about the equity basis for the Chinese joint venture, but this is a proportional consolidations of our Chinese joint venture, which is a measurement we use for the Nissan Power 88. On this basis, as you can see, that net revenues came to 12.84 trillion yen. Operating profit was 882.4 billion yen. Here again, on the next page, we indicated the numbers on the constant currency basis without the impact of the forex. As you can see on the right, net revenues exceeded 14 trillion yen, 14.33 trillion yen to be precise, and operating profit came to 1.19 trillion yen on this basis, in excess of 1 trillion yen. Based on this, operating margin would have been at 8.3%. So this level meets or largely exceeds the 8% objective that we set forth. These were the financial results. I would like to talk about some business updates now. This shows you the global sales performance. Our global sales volume rose from 5.42 million units to 5.63 million units. Next page. As stated at our half-year earnings, I said that our sales in the first half of the year slightly dropped compared to the comparable prior year period, but we tried to boost the sales in the second half of the year, hitting 3 million units. And as you can see, in the second half of the year, we sold 3.01 million units. Compared to the comparable prior year in the second half, it was a rise of 7.3%. Let me give you the breakdown by region. Looking at Japan, our unit sales was impacted by the suspension of Days and Days Rooks sales in the beginning of the year, resulting in 557,000 units, down by 2.6%. This is equivalent to the market share of 11%. Having said that, in July, as you may know, we resumed the sales of the Days and Days Rooks. And in August, we launched the Serena with ProPilot. And in November, we launched the Note e-Power. As a result, our market share in the second half of the year is very small, increased to 12.5%, which was 0.7 percentage points better than the prior year period. Let me talk about China. In China, as you may know, China is calculated on the calendar year basis. So these are the figures between January and December. Total industrial volumes rose by 13.2%. This is a big growth. While Nissan unit sales hit 1.35 million units, which was 8.4% up year on year. X-Trail, Sylphy, and the Qashqai were the major contributors. While our sales increased overall, accompanied by encouraging results of the Nissan brand, the market growth exceeded that of ours, resulting in losing our market share by 5 percentage points. The main reason was the strong growth of the local brands. And we do have a brand called Venucia brand in this local brand market. But Venucia brand could not keep up with the growth of other local brands. And this is one major reason. And we are making corrections. In December, towards the latter half of the year, we introduced the Venucia T90 crossover. And the Q1 sales in China, which is between January and March, outperformed the growth pace of the market and rose 5.3% to 314,000 units. In North America, Nissan achieved another record sales. In the United States, Nissan outperformed the market with a 4.2% rise in unit sales to 1.58 million units, equivalent to the market share of 9%, up 0.4 percentage points. Rogue and Altima, as well as full-size pickup Titan, are selling strongly. Some people say that the U.S. market has peaked after long term of strong performance. Nissan saw demand maintaining in the first 3 months of the calendar year. There is a big shift to crossover, and we have a leading presence in the crossover segment, so we believe that we can maintain the strong presence. How about Canada? In Canada, unit sales rose 3% to 138,000 units, equivalent to the market share of 7%. In Mexico, Nissan maintained its number one position, with sales rising to 409,000 units, 14.4% up, which was another record high. This is equivalent to the market share of 25%. Next is Europe. In Europe, excluding Russia, Nissan sales rose by 7.2% to 683,000 units. Navara pickup and Qashqai SUV are the drivers. And towards the end of the year, in March, the fifth generation Nissan Micra began to be delivered. How about in Russia? Economic uncertainty continued, and this negatively impacted the auto market, while Nissan sales in Russia decreased 19.7% to 93,000 units. We expect the performance to recover step by step after hitting a bottom in the end of fiscal year 2016. In other markets, the second one from the top, Latin America, was a bright spot where we are building momentum. Nissan outperformed the industry, increasing 6% to 182,000 units. In the Middle East, while down from last year, our decrease was less than the overall industry, which is a good result. In Africa and other markets, our sales decreased 10.7%, while TIV rose 6.2%. The disparity is due largely to Nissan's absence from the Iranian market, which has been significantly growing in the past fiscal year. In Africa, against the TIV, we are maintaining strong performance. So Asia and Oceania is where we see remaining tasks or challenges. How about products? In fiscal year 2016, we introduced these new models: Note e-Power, Serena, equipped with the ProPilot technology. You also see Kicks in the Latin America and Micra in Europe, and full-size SUV Armada in the United States, Infiniti Q60 and Datsun Ready Go, and Venucia, which I mentioned earlier, introduced T90. This is our strategy, the Nissan Intelligent Mobility. In this area, in fiscal year 16, we introduced new technologies and new products as a step in this effort. In terms of autonomous driving, we mounted the ProPilot technology on the new Serena as the first mass-marketed model. And with regards to electrification, the e-Power using the EV technology was applied to Note. And Note e-Power is highly appreciated by our customers as a new type of an EV. Regarding connected and new mobility service, which is a new area, with our partner DNA, we began preparing for the development of driverless cars and operation and field tests. In these areas, we are making steady progress toward the future. For this fiscal year, in fiscal year 2017, we are introducing the new Nissan Leaf. And here again, we are going to apply the ProPilot technology. Next is about the alliance. Last year, there was a big progress. Following Nissan's acquisition of stake in Mitsubishi Motors in October 2016, Mitsubishi Motors became the third member following Renault and Nissan. With this added scale, the alliance now enjoys nearly 10 million units of global sales. We expect to generate 24 billion yen of synergies benefiting Nissan for fiscal year 2017 between Mitsubishi Motors. We are on track to identify synergies, mainly in purchasing and logistics. In the midterm, there are a lot of discussions underway. We identify opportunities in platform development and cooperation in Asia. We announced the other day in Indonesia that we will leverage assets of Mitsubishi and receive a minivan from Mitsubishi Motors under an OEM deal. We will further specify these synergies going forward. As part of the preparation, we also mentioned that we will be creating new partnerships outside the traditional auto industry, such as suppliers and other manufacturers. And in this aspect, as you can see, in addition to DNA, we have started cooperation with Microsoft, Transdev, and Mobileye. We are working together with these partners for the future. And as you may know, in the United States, we have also started joint development and research of future technologies with NASA. In fiscal year 2016 was the final year of the 6-year plan Nissan Power 88. So let me review the results of the entire plan. Nissan Power 88 was a plan pursuing significant growth supported by a tremendous amount of investments. We set forth an 8% market share as a target, but we fell short of the target. However, in the last 6 years, starting from fiscal year 2010, as you can see, the size of our business increased by 30 to 43%. And we were successful in developing our global business footprint. As a result, we were able to provide a solid foundation for further business growth during the next midterm plan. Another 8, which is 8% operating margin, operational efficiency that can sustain the profitability, also improved. Though we faced difficulties resulting from huge investments to enlarge the size in the first half of the plan, there were some issues around quality and other aspects. But we surmounted the challenge in the second half and have been enhancing the operational efficiency steadily since fiscal year 2014. As you can see in this graph, based on the constant forex basis, our profitability rose by 1.2 percentage points and 1.3 percentage points respectively in 2 years. Under certain economic and forex conditions, Nissan is now able to sustain 8% operating margin. We strive to sustain 8% profitability under any other conditions, whether it's more stringent or severe. We have been saying that 8% operating margin is a commitment and 8% market share is a target. We intend to reach the 8% market share during our next midterm plan, a 6-year plan. Let me talk about the outlook and guidance for the fiscal year 2017. In fiscal year 2017, we will work on the following 3 themes: delivery of steady growth, introduction of new technologies and products to further promote the Nissan Intelligent Mobility, and full capitalization on the alliance benefits to make the above 2 a reality. These are the 3 themes. Talking about the sales, we anticipate the TIV to increase by 2.4% to 94 million units. Our global retail volumes are expected to rise by 3.6% to 5.83 million units, supporting our goal of delivering steady growth. As you can see in the breakdown, Nissan expects to grow in all regions driven primarily by China and Japan, where sales are expected to pick up. Whereas in the United States, we took a conservative assumption considering the market outlook and intensifying competition. 6.2% of market share is what we are assuming. Based on the sales plan, Nissan has filed the following full year forecast with the Tokyo Stock Exchange as follows. So this is the equity method applied to the Chinese joint venture, which is accounted below the net income. Using a foreign exchange rate assumption of 180 yen to the dollar. We are forecasting net revenues of 11.8 trillion yen, which is a slight increase year on year. Operating profit is targeted to reach 685 billion yen, representing a margin of 5.8%, and net income is expected to reach 535 billion yen. Next page, you see the profit variance. The proceeds from divestiture of Kaosonic Kansei is excluded from the reference. Kaosonic Kansei is no longer consolidated. So we made adjustments by deleting this proceeds of divestiture of Kaosonic Kansei. So with the scope change, the reference is 699.7 billion. With the improvement in revenue and cost, we generate 195 billion yen of positive, but there are R&D expenses increase for the future, which is a rise of 35 billion yen. And in addition to this, the commodity prices are expected to rise. So this impact is assumed at about 90 billion yen. And other negatives are 24.7 billion yen. And against the reference, still, we can increase operating profit to 745 billion yen. However, if we count the forex negative impact, in yen-dollar basis, it's practically flat. But this is not the impact of dollar-yen. Other minor currencies impact will be a negative, and this is pretty certain. UK, sterling, Canadian dollar, Thai baht, and being more specific, Egyptian currency are the currencies that are expected to deteriorate. So all in all, this will generate 60 billion yen of negative contributions. So the number will be at 685 billion yen. These are the assumptions for fiscal year 2017. With regards to dividend, considering healthy profitability and solid free cash flow, we will maintain a progressive dividend policy. We are forecasting a 5 yen increase in the full year dividend to 53 yen per share for fiscal year 2017. Last but not least, as I said, fiscal year 17 is also a year to kick off our next midterm plan. I will give you the details at later date, but let me give you the skeleton of the plan. There are two themes: delivery of steady growth and evolution. These are the two themes of the new midterm plan. Our growth objective, as you can see, is to keep 8% operating margin while growing revenue from 12 trillion yen size to 16.5 trillion yen. In addition, we intend to generate aggregate amount of at least 2.5 trillion yen of automotive free cash flow over the 6 years. As I mentioned earlier, in these 6 years, the 8% market share will be feasible. We have a visibility. In fact, the key here is our business in China. if we can increase our market share from 5% where we are today to 8% in the Chinese market, hitting 8% global market share is totally feasible. We are in the midst of finalizing the plan to hit 8% market share in Chinese market. In terms of technologies and business evolution, technological innovations and business evolution, we expect to see significant changes. Nissan has started working on the Nissan Intelligent Mobility, which is our strategy. And here, the question is whether we are able to leverage the alliance benefits and operate the alliance efficiently and effectively. So in addition to Renault and Nissan, we have Mitsubishi Motors in the discussion to think how we can operate the alliance efficiently and effectively. And based on the results of the discussion in the latter half of this fiscal year, within this fiscal year, once we are ready, we plan to announce further details of the next midterm plan. That's our intention. That concludes my presentation. Thank you for your attention.
Thank you,
ありがとう
Sakawa-san.
ございました。
We'll now turn to the question and answer session. If you please raise your hand and identify yourself and your outlet. Please limit yourself to 2 questions. There'll be microphones that will be passed around. We'll start up here with Nikkei.
I am Hoshi from Nikkei Shimbun. Mr. Saikawa, I have a couple of questions. One is about Nissan Power 88. As you said, the global market share 8% and operating margin 8%. And besides these, there were other numerical objectives. And in terms of numerical objectives, you fell short in many of them, it seems like. So could you elaborate on this? What did you accomplish in the Nissan Power 88 and what are the remaining tasks? From your viewpoint, could you elaborate and analyze? And after doing so, as a new CEO of Nissan Motor Corporation, what is the new competitiveness and new value of Nissan Motor? How are you going to enhance these aspects of Nissan? This is my first question. And the second question is about America, U.S. operation. In fiscal year 2017, there's a forecast to decrease the profit because you have incorporated that you are going to struggle in U.S. operation. New car sales are picking up and incentives are plateauing, and long-term interest rate is rising while the residual value is expected to drop. So volume increase and profit increase. Structurally, it's becoming hard to do this in the U.S. You are more reliant or depending on U.S., how are you going to get out of the structure or breakthrough? These are my questions. Okay, let me talk about Nissan Power 88. Talking about U.S., after I talked about it, I will hand over to CPO Mr. Munoz to give additional information. Nissan Power 88, as you know, it was a 6-year plan. So devising a 6-year plan by itself was a good thing. I think this was one big contribution to the company. As a result of having a 6-year plan, in many of the numbers, there were good results and not so good results. But there's an impact of having a 6-year-long efforts. We were able to increase our size and at least geographical expansion. For geographical expansion, we were able to make reparations at a certain level. So this is a good accomplishment. So before we faced significant changes, we were able to prepare. So this was a big difference from the 6-year plan of Nissan Power 88. This is one positive aspect. And in terms of profitability, as I said, under certain conditions, we are able to sustain 8% operating margin thanks to the big enhancement in the second half. And this is becoming a strong asset for the company for the future. However, what are the remaining tasks or opportunities for the future? There are a lot of them. 6-year plan initially are not fixed in all the details. It's not in the spreadsheet where we have identified all the specific items. One big remaining task is that we are very good in cost enhancement, but the revenue opportunities are where we see mixed picture. So we need to grasp more opportunities on the revenue side. In doing so, In terms of midterm plan, OAO, overall opinion, which is about brand value, how to enhance brand value will be the foundation for the midterm competitiveness of the company to enable the company to sustain the profitability and grow. We did make progress in this aspect. However, we were unable to maximize the brand value of Nissan. And from the customer's viewpoint, it is not fully recognized. So enhancement of brand value of OAO is a big opportunity or challenge. US, yes. Regarding the United States, as you said, well, yes, the US market, I'm not sure whether it's right to say it's peaking out, but it's plateauing at a high level and seems like it's not going to grow much. And in the latest performance, we are seeing a little bit slowdown. Therefore, this fiscal year, with regards to volume increase, we are taking a conservative assumption. On the other hand, if you look at the U.S. economic fundamentals, these are very robust. So, U.S. market, we believe, will continuously remain healthy. So, without damaging the profitability, we would like to grow as much as possible, and that's our basic position. As I said, in order to grow in this market, brand value should be enhanced. OAO should be enhanced in the midterm range. This will be a big theme for the company. It's a challenge and it's a big opportunity for us. The details will be given by Mr. Jose Munoz. Mr. Munoz, yours.
Thank you very much, Sakao-san. So as Sakao-san mentioned, we've decided to take a conservative approach in terms of TIV evolution based on what we've seen in the market the last few months. I think there's been already 4 months in a row where the market has dropped year over year. Within that, the way we are planning to maintain a strong performance in the market is got several axes. One axis is the product. So we are about to launch a crossover, which is new for Nissan in the market, which is so-called Rogue Sport. And as you know, we launched last year Titan, and very soon we're going to launch the last version that is still pending to be launched in the market, which is the King Cab. So in terms of the Rogue Sport, we believe that based on the evolution in the market, which is moving from cars into trucks, is going to help Nissan close the gap in terms of the segment share that we have between cars and trucks. In cars, we are above 10%, and in trucks, we are above 6%. So we have almost 4 points difference. So the Rogue Sport is going to help to close that gap. And we had experience in the past when we were competing with the so-called Rogue Select. So we're very, very positive. The other element, as mentioned, is Titan. Titan, we started just a few months ago with about 0.4% of segment share. We ended this fiscal year with more than 2%, and our expectation is that by the end of fiscal year 17, we're going to go above 5%, which is our milestone objective. This implies a significant volume and profit contribution. So one axis is moving from cars into trucks. The other axis, as Sakao-san mentioned, is based on OAO improvement, overall opinion improvement. And on that one, we have several axes where we're working. One is to step-by-step improving the number of cars that we have in the consumer report recommended, now that we have much better IQS records. And also, we are going to capitalize on the new global positioning of the brand, the Nissan Intelligent Mobility, plus capitalizing on improving what we call the three-man option, which helps us capitalize on the mix and also make a better net revenue per model. So I would say these are the key axes, the product axis, and also the overall opinion axis. The third element that is a kind of foundation that we are deploying as we speak, it is to capitalize on the fact that we deployed regions in the United States, and now we're working into operating in a regional manner. This allows us to optimize in terms of incentives. For example, in those areas of the country which we are too much dependent on lease, which has an impact on residual values, we're trying to optimize a little bit, whilst we have other areas of the country where we can have a little bit more opportunity with better profitability even for the same car. So these are the key elements of our strategy in the United States. So we are positive, cautious, but positive that our plant is going to continue to deliver good results in the marketplace.
Thank you, Jose. 今ですね、ホセ言った
As Mr. Munoz said, we will be cautious. However, if we look at the product pipeline in the midterm, we have been preparing for this for the midterm. In that sense, we are in a comparatively good position, but we will be cautious. And as Mr. Munoz said, the region, it's a region, yes, but in the U.S., within U.S., we divided them into specific regions. So regional management is strengthened as a result of this structure. That's what he meant.
Next, we'll go Toyo Keizai.
Toyo Keizai Kigawa is my name. Thank you very much. I have two major questions. Firstly, with regard to Chinese market. As Mr. Saikawa said earlier, in the next midterm plan, a share will be 8% or above in the Chinese market. That is your target. Last year, just concluded, the sales units was not catching up with the TIV growth. However, on an equity basis, there is no change. That is to say, the profit per unit is maybe deteriorating, maybe 10% drop in my view. Now, the current Chinese market, in order to raise profitability, when you are raising the unit volume, but you are deteriorating profitability, what is happening? And also, in order to achieve 8% market share, more concretely, what kind of tactics are you going to use, including dealership and also launch of new models? What kind of strategy do you have in China? Second question is regard to electrification. The new Leaf is going to be launched soon. And if you look at the global trend centering around European makers, EVs are being launched. It is expected to happen. So the current product lineup of your company today is rather limited. Frankly speaking, high specification EVs maybe you have in mind as a basis. However, when you look at Chinese market, maybe more affordable EVs would be popular in the market. Therefore, as I talked about market share improvement in the Chinese market, including emerging markets like China, EV lineup, for instance, are you going to move to high-end or low-end? Are you going to have a more full-size lineup, including various platforms? So what is the next game plan for you? First, with regard to Chinese market. With the numbers, sometimes I can show you some numbers, but otherwise I can't. But in the first place, the Chinese market is such that it is highly profitable market, and it is so even today. It has been too. However, competition is intensifying, and gradually profitability is declining because of intensifying competition, not only for us, but also for other manufacturers as well. Without sacrificing profitability, how much are we going to catch up with the market TIV increase? Sooner or later, it's going to become a US market. However, now the profitability was very high, but we don't want to sacrifice profitability while we want to increase sales volume, and we have to secure a battlefield. That is the key point. So that is the tendency or trend we see in that market. Therefore, under the controlled situation, to some extent, we can secure profitability or profits. We have to maintain certain level of profits. However, we are shifting our gear toward the sales promotion and share expansion as well. To be more specific, as I said earlier, Chinese growth rate of the market, car market. The local brand, I don't know if that expression is right or not, but the local brands, the Chinese brands are growing very rapidly. Their engineering technology and also car qualities of local brands are improving significantly and very rapidly. They are improving so fast. And against this backdrop, in order to win the market, there we introduced the Venusia brand. However, compared to Nissan brand, Venusia is only a baby, so we have to strengthen this brand. So that pace of effort is not quick enough yet. That is why we are not catching up with the TIV growth, and we are making accelerated efforts. Therefore, there is an area that have to be secured by Venusia, and also area to be secured by Nissan brand, and also another segment is a premium brand. This is going to be the largest market, Infinity, in other words. So these three brands have to be enhanced with the concrete strategies, and as a result, we want to achieve 8% market share, and that is what we want to achieve currently. With regard to China, maybe Seki-san, can you make a supplementary comment? Yes, he's in charge of Chinese market. Seki-san, please. Thank you. As Mr. Saikawa just explained, last year, 13% growth. And this year, maybe not as much as that, but 7% growth is expected by us. And most recently, 5% or so growth is achieved. And this is a little bit short of our expectation. However, this is good enough. And now, as of April, the growth was about 6.3%. So industry average, compared to the industry average, we are growing faster. So however, we are lagging in the Nissan core models. The contribution is made. The Tira. And Venusia, as was explained earlier, T90 was launched last year. It's working very well. Thanks to that, the industry average was 13%, but our case was 22%. As we introduced the Shanghai Motor Show, M50 was launched, and we are going to add another two models. Venusia will be strengthened. So we are now ready. We have completed our preparation, so the benefit will arise from this year. In addition to that, we have Infinity growth to achieve 8% market share. And also with regard to EVs, the affordable EVs, yes, we are working on the pipeline. Maybe they will be launched from next year onward. But having said that, we are working with the Skill venture company. Venusia R330 is the basis for the affordable EV. We have already introduced the DD taxi. This is an internet-based taxi, and the demand is high there. And to some extent, we are seeing the good results. So in this way, a high spec, we are going to use Nissan, and low spec Venusia brand will be used. In addition, in China, we have various venture companies, and so that we can launch both high spec and low spec cars as well.
Including what he said, the second point, which is about electrification. As I have said, electrification is one of the themes in the world, and we are a pioneer of EV, and we would like to maintain the leading position, and that's part of the midterm plan. It's part of our policy, which will continue. So the question is how to look at it. Being an EV, simply introducing an EV or increasing or expanding the portfolio of EV is too simple. It's no longer, competition is not only determined by introducing an EV. We used to attract attention with EV because it was an advanced technology, but now that will not be the case. In the next 1 or 2 years, the driving range, which was a concern, will no longer be a disadvantage for EV. So long driving range will no longer be a differentiator for EV. Against such backdrop, what will be the competitive edge? Using EV technologies, we need to develop attractive products. So product attractiveness will be the determiner of competition, and how to efficiently and effectively enrich the product portfolio will be the determiner of competition. In that sense, we don't publicize figures in the futures for the future, but in terms of portfolio deployment, whether we are conservative or aggressive, we have an aggressive plan. If you ask me whether it's conservative or aggressive, we will unveil it when we are ready. In the most recent case, this fiscal year, as I mentioned, new Nissan Leaf will be introduced globally. This is one big step forward. By using electrification technologies, we will enrich the attractive product portfolio. And here, last fiscal year, we announced e-Power. E-Power is a technology based on EV technology. It's a new type of EV. So including e-Power, the question is how to enrich the product portfolio, which is very attractive. Depending on the market, acceptance is different. Therefore, in each market, we intend to introduce attractive products. How many attractive products can we introduce in the market will be the determiner of the competition, especially after 2020. And here, we will be more proactive, assuming risks, and expand. With regards to China, EV seems to be advanced while we are not catching up. That may be the perception. As Seki-san mentioned, there are two trends in China. Short driving range EV, compact EVs with shorter driving range are the vehicles that are deploying fast, delivered by local brands, while in the B and C segments, we see longer driving range, more like a Japanese or Western car makers. And this is the area which is yet to be mature. So we are still in the catch-up mode for the shorter range version. But when it comes to the longer driving range, where EVs will replace the conventional cars, we are not at all slower compared to the competitors. So US, Japan, Europe, and China, in these countries, we will put a same focus on enriching the portfolio. Thank you.
Next question here in the front, on the end.
Yomiuri Shimbun, Ozawa is speaking. I have a couple of questions. The first one is related to the previous questions, which is about Nissan Power 88. Operating margin. How do you evaluate the operating margin? As you have said in the documents, under the certain economic conditions, it says. How about Forex, external factors, including external factors like Forex? Is this a commitment or target? I mean, what's the positioning of the objective of operating margin here? And under certain conditions, what do you mean by this? What level of economic conditions are you talking about? And as one of the means, you said that you are trying to get the return on investment in emerging countries and LCV. What are the priorities or challenges, and how are you going to resolve them? This is my first question. And the second question is about French presidential election outcome. Mr. Macron is now a new president, and the business world appreciates this. But with regards to Nissan, there were discussions or debates around Florence law, and you have been dealing with Mr. Macron, and you agreed to ensure the independency of the entity. Is there any concern whether this agreement may be sacrificed or compromised, or looking at the macroscopic area like business or sales, is there any impact from the election results? Talking about France.
The presidential election was just so over, and my frank view is as follows. We are relieved. We are happy with the result. The EU has to be stable, and also French economy has to be stable and grow So from that perspective, I think this election result is quite good for us. And in Japan, Mr. Macron is often talked about in relation to Florence law because he became famous in that episode. However, conversely speaking, from my perspective, that's 2 years ago. And in the process of this discussion with the government, Mr. Macron, so new president-elect himself, with his team, we had a very in-depth discussion. So in that discussion, alliance objectives and how we are going to manage and control the alliance, in such a discussion, we have shared with them what we have been doing, what we want to do in the future. As a result of such an in-depth discussion, value of alliance has been fully appreciated, understood by him. So such a person has become the president of France, and that is something to be relieved, and that would make our life easier, I think. That is my frank view. So I don't want to talk about what happens if it didn't happen.
について
Talking about Nissan Power 88, as I said, it was a 6-year plan. So while we grow, we try to sustain a certain level of profitability, and commitment was to sustain a certain level of profitability. During the 6 years, economic conditions largely changed, not only Forex, but the market conditions, emerging countries. These factors changed largely. So it's very difficult to say under a certain conditions. As I said, under certain conditions, we are able to maintain the profitability. And internally, last year in fiscal year 16, at 115 yen to the dollar, at this Forex, we intended to attain 8% profitability, and that's where we are today. So we did achieve this. So going forward, of course, we will sustain this, maintain this. And as I said, in the following year, we are going to make further improvements. After making further improvements, we should be stronger against stronger headwinds. As I said in the past, smaller cars have less profitability, I said, and LCVs profitabilities are poor. But these are where we are going to leverage on the alliance benefits for. Naturally, Renault's know-how in compact cars, and with regards to LCV, in alliance, we are trying to make an LCV leader, and in this effort, Nissan, as I said, is strong in pickup truck and frame SUV. In frame SUV and pickup, we would like to be stronger than Toyota, so we will concentrate Nissan's resource in this area. But when it comes to pure commercial van, Renault is pretty strong. So in compact cars and pure commercial vans, we will make sure that we eliminate duplications and capitalize on Renault's assets as much as possible, while Nissan's resources are concentrated on frame, SUV, and pickup, and maximize the benefit. That's how I'm going to capture the remaining opportunities. That's our intention. Thank you.
Thank you. I think we have one more question because we've got about 6 minutes left. We'll go with Hans in the front.
Thank you, Hans Greimel from Automotive News. I'd like just a quick overview of what happened in the fourth quarter, just by the fourth quarter by itself. Which way did profit go, net income, operating profit, and global sales? And also, I'd like to take another look at the SUV situation, the crossover light truck situation in North America. Do you have right now I think the share of your sales through the first 4 months is about 50% light trucks, I think, in the United States. Do you have a target of where that should be? I think the market in general is around 61%, which is quite high. Do you have a target for where that percentage needs to be for your lineup, and how are you going to get there?
Understand. So maybe for the fourth quarter, I like to invite Joe to explain what is happening in the fourth quarter first, and then for the SUV in the Jose.
Looking specifically at the fourth quarter, we had a very good fourth quarter. It was a quarter where we were able to show year-over-year improvement in terms of our total operating profit. Our profit, 239 billion yen in FY16 fourth quarter versus 205.7 in the comparable quarter in FY15. So how did that happen? Basically, when we look at the operations of the business, we had favorable performance from the revenue side of the business. The combination of the improvement in income related to the increase in volume and mix more than offset the increased selling expenses that we had on a year-over-year basis. So that contributed positively. We also had continue to have great performance on the cost side of the business. When we look at on our material cost reduction on a year-over-year basis, we were basically 45 billion yen positive. We had some negatives primarily related to our sales finance business, particularly in the U.S. in the fourth quarter, resulting from a higher level of net credit losses. But on balance, the operations themselves generated 54 billion yen improvement, almost 26%. Now, not all of that made its way to the operating profit bottom line, because in the quarter we also had, we continued to have negative foreign exchange impacts on a year-over-year basis. Not as pronounced as we've seen through the first 9 months of the year, but for the quarter specifically on a year-over-year basis, we had negative 20.5 billion impact on FX. So those really were the drivers of our operating profit number in the fourth quarter. Obviously, net income number improved significantly because in the fourth quarter we completed the divestiture of our interests in Calsonic Kansei, and that generated a one-time improvement in income. The pre-tax gain was 111.5 billion yen. Okay.
Thank you, Joe. Jose, please.
Thank you, Joe. Thank you, Hans, for the question. So indeed, I would say one of the key factors of Nissan being in the calendar year the fastest growing brand in US and in the fiscal year, I think we've been the second fastest, is been the capacity to adjust the whole operation to the market condition, thanks to great operations from Monosukuri, from manufacturing, and also from R&D and sales and marketing. We've moved from being typically a 60% car company and 40 truck to 50-50, as you mentioned, and we are on our way to 60-40, 60 for trucks and 40 for cars to be adjusted 100% to the market. The way we're going to do this is, as mentioned, trying to put more efforts into the new models that we're launching in the truck segments, so with the Rogue Sport, but also with the Titan full deployment, where we need to get to 5% and beyond. But also, we launched last year very successfully the Armada, and we're going to enjoy the full year sales of Armada together with Murano, which is doing well in the market. Needless to say that the margin that we enjoy with the frame SUVs, which is one of the strengths of Nissan, is better. Also, the model mix and the channel mix is better. So 60-40 trucks to cars, to answer directly your question, that's where we're going.
Thank you. So, Hans, anyway, as you said, the Nissan has more potential as crossover and SUV. So we completely welcome this change, and we are ready to do it. Okay.
Thank you. Thank you very much. This concludes the question and answer session. Thank you, Sakawa-san.
ありがとうございました。
Thank you very much.